So you decided to invest in stocks. That's great. Here's the problem. There are approximately 6,500 stocks traded at the New York Stock Exchange, and another 3,500 stocks are traded on the Nasdaq. That's a total of 10,000 stocks. Now, when I was new to trading, I didn't know how to pick the stocks to invest in. Should I subscribe to a newsletter, or should I listen to the talking heads on TV? Or should I try to develop my own trading system? How do you decide what stocks to buy? Well, you see, there are mainly two ways to pick stocks to invest in. Number one, fundamental analysis, and number two, technical analysis. Now, in this video, I will explain both approaches and answer the question, which is better, fundamental analysis or technical analysis? So let's get started. So what is fundamental analysis? Now here's how to pick stocks to invest in using fundamental analysis. Fundamental analysis means that you are analyzing the company's key performance indicators, also called KPI, to determine the true value of a company. And the most common used KPIs are revenue, profit, earnings per share, also called EPS, the price to earnings ratio, or also called the PE ratio, the market cap, and many others. Now, in addition, you need to consider some other factors when using fundamental analysis to determine the fair value of the company, such as the business model, the competitive advantage, the management team, national or global opportunities and threats, and the list goes on. Now, if you're right now confused or feel overwhelmed, you're not alone. That's why many investors listen to analysts on TV like Jim Cramer or Rick Santelli, just to name a few. Or they rely on newsletters to pick stocks to invest in. The idea is that somebody else who is supposedly smarter is doing the analysis for them. Now, here's the problem with fundamental analysis. Yes, there are some formulas on how to calculate the hard data. For example, the earnings per share and the PE ratio. But when it comes to other factors like the business model, opportunities and threats, everybody has a different opinion. And who decides which opinion is right? Only the market will tell. And that's why fundamental analysis is very difficult and inaccurate. Often the time horizon for fundamental analysis is years, for a reason. If you wait long enough, eventually you'll be right. Here's an example. Right here on the screen, I'll show you a chart of Tesla. Now, as you can see, Tesla has been trading between $100 and $350 for the past 5 years. Now, there are many critics who say that Tesla's business model and management style doesn't work. They're criticizing the CEO, Elon Musk, and when the stock went from 360 to 180 within a few months, they said, see, we're right. On the other hand, you have analysts who are bullish on Tesla. They love what the company does. And when the stock bounced back from 180 to over 400, they said, see, we are right. As you can see, both of them were right. If you wait long enough, every analyst will eventually be right. But you see, in my opinion, this is too vague to make money with it. So let's take a look at technical analysis now. What is technical analysis? Well, technical analysts use charts and past price movements to predict the next move of a stock. And here's how to pick stocks to invest in using technical analysis. When using technical analysis, there are two main approaches. Number one, chart patterns, and number two, indicators. But let's talk about chart patterns first. The most popular chart pattern is the so-called head and shoulder formation. Here's an example. I'll show it to you right now on the screen. Now, there are also many others. Flags and pennants, triangles, cup and handle, double tops and bottoms, just to name a few. Now, here's my problem with chart patterns. I see them in hindsight, but not while they are forming. If you show me a chart right now, I can show you every single chart pattern that occurred in the past. But I could not tell you what chart pattern is forming right now because there's a lot of room for interpretation. So, What's the solution? Well, I personally love indicators. And one of the most popular trading indicators is a moving average. Here's an example. See, the red line is a moving average. The idea is that prices are more likely to go up when they remain above the moving average. And the idea is that prices are more likely to go down when they are below the moving average. Of course, this example is very simple. There are dozens of indicators, and based on my experience, there's no such thing as the best indicator. Now, I personally found that a combination of 3 indicators is very powerful, and I'll tell you more about this in a minute, but let me know, thus far, is this helpful? If it is, do me a favor and click on like, because this way I can see which videos you like and I can make more of these videos. Anyhow, so let's continue. What is the difference between fundamental and technical analysis? Well, when using fundamental analysis, you have to dig through balance sheets and profit and loss statements, and you have to analyze the cash flow and the assets of a company. And in addition, you have to look at the business model, the competitive advantage, the management team, as well as national and global opportunities and threats. And as you can see, fundamental analysis is difficult and time-consuming. And it leaves a lot of room for interpretation. Therefore, it's almost impossible for the private trader to conduct a thorough financial analysis to pick the best stocks to invest in. Now, on the other hand, technical analysis is quite easy because these days, every charting software has already all indicators available to you. So you can use technical analysis to pick the right stock in just a matter of hours. So what is better, fundamental or technical analysis? How to pick stocks to invest in? Should you use fundamental analysis or rather technical analysis? Well, you probably get the idea. For me, technical analysis is way easier than fundamental analysis. I love indicators, and here's why. Indicators are scientific and based on statistical analysis. They are easy to understand and use. They are black and white. Either prices are below the moving average or they're above. You don't have to guess. You can use indicators without any prior experience. It's perfect for beginners. And the best, these days you have powerful software packages that do all the work for you. You see, I personally use 3 indicators to pick the best stocks to invest in. And I made a video for you that shows you exactly the indicators I use, what settings I use, and when I buy stocks. And if you want to see this video, go to mytradingroutine.com. I'll link to the video in the description. Okay, now you know the different ways how to pick stocks to invest in, and you know the difference between fundamental analysis versus technical analysis, and you know which one is better. So the next steps, check out my video and try it for yourself. You're going to love it. Hey, if you enjoyed the video, please make sure that you give me a thumbs up and subscribe to my channel. And right now, go to the next video. It should be showing right here, or it's in the description below, so that you know exactly what indicators to use with what settings and how to use it to pick the best stocks to trade. I'll talk to you very soon.